Massive part of the stock market that operates completely in the shadows. Billions of dollars are changing hands every single day, totally hidden from public view. Today, we're going to pull back that curtain.
What if I told you there was a secret, members-only stock market just for the biggest players? It sounds like something out of a movie, right? Well, it's not a hypothetical. It's very, very real, and it has a huge impact on the prices that the rest of us see.
And that brings us right to our first stop, the market's shadow, where we're going to talk about where all these billions are traded in secret.
Yeah, it's a pretty wild fact when you first hear it. You probably think of the New York Stock Exchange when you picture stock trading, right? The big board, the bell, but a huge chunk of all trades never even touch it. They happen in these private, alternative places.
So what are these mysterious places called? Let's lift the veil on the private exchanges that are known as dark pools.
Okay, so here's the textbook definition, but let's break it down. A dark pool is a private exchange. The keywords you really got to focus on are anonymously and after the trade is executed. Basically, who's buying and who's selling is a secret, and the public doesn't find out how big the order was or at what price until the deal is already done.
And this chart really nails the difference. Think of a public exchange like the NYSE as a big, loud public auction. Everybody can see all the bids and asks as they happen. A dark pool, on the other hand, is like a silent auction. The big institutions put in their bids privately, and you only see the results after the winner is declared. And why do they do this? Well, it's so these massive funds can buy or sell huge amounts of stock without causing a panic and sending the price flying up or down.
Okay, so theory is one thing, but let's look at some real numbers. We actually got our hands on some pretty incredible data that gives us a rare peek inside these secret trades, and we're going to use the tech company PLTR as our guinea pig.
All right, let's dive into the data. What you're looking at is a log of dark pool trades for PLTR on just one afternoon. You see the time, the size, that's just the number of shares, the price per share, and the premium, which is the total dollar value of that one trade. And just look at those values. We are talking about millions and millions of dollars in a single transaction, all happening behind the scenes. And just to really drive home the insane scale we're talking about, check out this number. The very next day, on Friday, February 13th, there was a single dark pool trade for PLTR worth $204 million, one trade. And here's what that $204 million bought, 1.5 million shares. Now, can you just imagine the absolute chaos if an order to buy that many shares just popped up on the public market? The price would probably just skyrocket instantly. This is the exact kind of thing that dark pools are designed to prevent.
So we've seen these individual snapshots of these huge trades, but what happens when we start stringing them together? Let's follow the money and see what kind of story the data tells us over a few days.
Okay, now we can see how this trend starts to build. On the left, we've got the trades from Thursday, February 12th. Prices are mostly hanging out in that $126 to $130 range. Now look over to the right. This is just 4 trading days later, on Wednesday the 18th. Look at those prices now. They are consistently in the $135 to $140 range. That is a clear march upwards in just a handful of days.
And this table here just makes that trend crystal clear. You can literally see the floor and the ceiling for these big block trades just rising steadily all week. They went from topping out at $130 to blowing past $140 just a few days later. You can tell something was brewing.
This is all really fascinating stuff, but let's connect the dots. What does this hidden activity actually mean? What's the big takeaway from all this?
So what have we learned here? Well, first, dark pools aren't just some shady backroom. They have a real purpose. They let huge funds trade efficiently without causing a market meltdown. But for us, and this is the really interesting part, this hidden activity can be a powerful clue about what the big institutions are thinking. Seeing this kind of consistent buying suggests the big money is really interested. And of course, this is not financial advice, but it is an amazing tool for understanding how the market really works.
And that's really the bottom line. This hidden activity can be a powerful leading indicator. It's like getting a little sneak peek of where all that institutional money is flowing before it's fully baked into the public stock price.
And all of this leaves us with one last big question. The people who support dark pools say they're essential for liquidity and stability. The critics say they create an unfair advantage. So, in our world of instant information and endless calls for transparency, should any part of the market be allowed to operate in the dark? It's a really fascinating debate and definitely one worth thinking about.